expectations of the public are met. He observed that despite accelerated global terror, Boko Haram attack got reduced from 22 per month in 2015 to a little 9 per month in 2016, and only for Sambisa to be liberated last December. He said that it is time for President Muhammadu Buhari to demonstrate courage and put what he described as square pegs out of round holes to ensure that his administration provides citizens with the desired change.
All right, Bayo, let's, before we take the other headlines from the front page of the Nigerian Parlour, there's a story, the headline I read from the Nation newspaper about JAMB asking universities, specialized universities, to stick to their core mandate. Some of them, University of Technology, University of Agriculture, they are busy offering courses in banking and finance. They are offering courses in law, in accounting, and in some cases they are referring to some of these courses as banking, engineering, accounting, technology. But my concern, Blessing and Bayo, is that the directive is said to have been issued by the Federal Ministry of Education through JAMB. Now, where is the NUC?
What is National University
Commission, that's right. It's the NUC that accredits those courses. And if those courses are not accredited, then, of course, anyone enrolled in such a program will be in a futile chase for a qualification.
The wild goose chase.
That's right. Let's take the Nigerian Pilot. Some of the headlines already on the front page of the Pilot we've read before. Just below the name flag of Nigerian Pilot. Nigeria declares 3-day mourning for late former Governor Kure. Details on page 4. Troops kill scores of terrorists and repelled Boko Haram attack in Yobe. That's on page 6 in greater detail. Now, the same Bakare story that Bayo has discussed, that's the lead story for the Pilot. Bakare to CBN, that's the kicker. Discard confusing exchange rate policy. Details of that can be found on page 4. Now, many more Chibok girls returning soon. That's attributed to President Buhari. That's on page 4 in greater detail. Now, below that you have NSCDC, that stands for the Civil Defense, uncovers strange Shia faction in Borno. And MMM Nigeria introduces Bitcoin in comeback plans. Buhari's government doesn't lack direction, says Bakare. Boko Haram, that's the kicker. South African mercenary firm drags federal government to court. And federal government approves Al Makura's Lafia Cargo Airport project. Listen.
Okay, to the authority paper now. Just above the nameplate, we have about 3 stories. Nigerians are suffering, which is part of the story just read from your paper now, Kingsley. Nigerians are suffering. Tunde Bakare warns Buhari. That story found on page 4. And still at page 4, 42 oil wells, Abia to probe alleged withheld 9.7 trillion naira by federal government. Ronaldo, Messi, others in the race for FIFA World Player of the Year. You find us on page 45. And just below the nameplate, you have Ohaneze election. Nwodo, Madueke, Ejike raised the stakes. The story continues on page 2. And the photograph you have right there on the front page is that of Governor Nyesom Wike of Rivers, decorating the chairman of Nigerian Legion in the state, Colonel Wilberforce Josiah, retired, at the emblem appeal launch to mark the 2017 Armed Forces Remembrance Day celebration in Port Harcourt. And the story continues on page 2, but here is Wike conversing for better reward for ex-servicemen. Right.
Well, service to the nation must always be accorded respect. In fact, one of the highlights, I think, that will be emphasized towards January 15, which is the crux of the challenge, is that these senior citizens must be accorded preference in the National Health Insurance Scheme. Having served the nation very well, one of their challenges is always health. And if that is taken care of, it will go a long way in paying their respect. But talking about issues of the moment, Pastor Enoch Adeboye has stepped down as the General Overseer of the Redeemed Christian Church of Nigeria. He's no longer the overseer of Nigeria, but he's the overseer for the rest of Nigeria. And he says he cited a regulation by the Nigeria Financial Regulation Council of Nigeria, FRCN, that stipulates that 20 years mandatory term for heads of religious group and civil society. The Reverend Pastor has said that this regulation should be extended to other clergymen, such as those of Living Faith, Deeper Life and Redeem Evangelical Church. There have been mixed reactions about this. The reaction is coming from a legal advisor of the Christian Association of Nigeria. He said, however, the FRCN reportedly went ahead because there is no gazette suspending the law. They were arguing that this was intended, the legal advisor for CAN, his name is Kamkur Samuel. He said the law may have been enacted with good intention, but the way it is going about, it is trying to undermine the churches. But there are other clergymen who also have come that it is a positive development because it gives an opportunity for the young ones to grow in the church. Another report is citing the controversy between the ministry and the FRSCN. The ministry said that law should not be implemented, and the ministry is saying that there's no gazette stopping the law, and therefore it went ahead. So that is the latest on that development.
All right, I was just wondering, you know, the issue, of course, Bayo just mentioned now, it's been trending, you know, since the weekend. Exactly. You've had various accounts, you know, first a letter, and then some denial, subsequently a clarification. You know, nobody was quite sure what was playing out. Well, the Financial Reporting Council of Nigeria Act, as you talked about, was enacted in 2011. Of course, it has to do with accounting procedures and standards for public institutions, you know, including, of course, not-for-profit organizations, which, in this case, has been said, if they do then participate in economic activities, you know, they also have an obligation to report. Essentially, the Financial Reporting Council and its activities, that were the standards that it sets to deal with corporate governance issues, you know, but especially in quoted companies.
Not only that, yes. In this instance, it says that any organization that is registered with the Corporate Affairs Commission must have its head, the tenure of its head, not exceeding a period of 20 years. Right. It has also affected even some banks too.
Well, yeah, that's right. There was the Central Bank Governance Code for banks indicated at some point that first, you know, two of the critical things that happened, if you recall, you couldn't then be chairman and CEO at the same time, as managing director. And this story has to do with the passage of Abdul Qadir Kure, former governor of Niger State. But below the nameplate, you have two other headlines. It says, Nigerian importers to spend 59 billion naira more on freight charges annually. And NNPC targets 60% local refining capacity in 2017. Details of that story can be found on page 6.
Just to wrap round up, Ghana had its 5th president over the weekend. Nana Akufo-Addo was sworn in. Excuse me. He promised to stamp out government corruption and kickstart the private sector. One of his measures that he's going to put in place, we will reduce taxes to recover the momentum of our economy. Nana Akufo-Addo is a former foreign affairs minister, and he was also a former human rights lawyer. He is aged 72 years old. He is also the 20th African leader that is in that 70 years age bracket. Two other African leaders are in the 80 years bracket. They include Paul Biya of Cameroon, and two others are in the 90 bracket, include Robert Mugabe of Zimbabwe, who is 93. In his inauguration Saturday, it has become a matter of embarrassment because parts of his inaugural speech were identified to have been plagiarized, was directly taken from the inauguration speech of January 20th, 1993 of President Bill Clinton, and another from that of the later President George W. Bush Jr. And a simple clause that one American president once said would have cleared that, instead of putting it in context as if they originated that. You recall there was a similar incident during the presidential campaign of President-elect's wife, Michelle Obama's speech.
Yeah, so, and then we also had the same situation here with us in Nigeria. President Muhammadu Buhari, of course, took prompt action. And in the case of the new Ghanaian president, the communications director has been fired. But the point is, ultimately, the person who delivers the speech takes responsibility for it. But nobody expects the president or the governor to write his own speech. So the liability is squarely, as it were, on his aides. Who is the ultimate secretary, as it were, for his speech. In other words, who clears the final speech for him to deliver. And preparing for a speech it's not an easy task.
Yes,
it's not an easy. I think there's some intellectual laziness that you cannot acknowledge what has been said before, or you do not wish to give proper attribution to what is there. The easiest thing, there are softwares now that you can detect those things very easily, particularly in the academic world. So the easiest thing to do is, if you want to use that particular idea, you rephrase it.
Yes, or attribute it.
Yeah, attribute it. That's a lot better.
It's easier to...
That's right.
Well, before we go, we might not be able to see this. It's on the inside page, a snapshot. Horse cries, breaks down at his beloved owner's funeral. It is quite touching. It's on the inside page of the Daily Trust. If you care to know. All right, Bayato Ebi, we'd like to thank you very much this morning.
Thank you.
See you tomorrow. That's great.
Have a challenging week ahead.
Oh, okay. We'll surmount it.
Tai Sholarin re-edited. Bayato Ebi, thank you for being with us once again. We'll take a short break now. When we return, of course, we shall be dealing with how to maximize the potentials of the stock market in Nigeria.
Nigerians. Suicide bombers are not spirits. They are not ghosts. They are human beings like you and me. They live amongst us. They are your neighbors. They are your friends today, but terrorists tomorrow. So you must know your neighbor now. Security begins with you and me. Know your neighbor. Be vigilant. Be security conscious. Report suspicious persons, objects, and movements to the police and other security agencies. The security of our nation is a duty for you and me.
If you see something, say something. Nigeria unite against terrorism. This message is brought to you by the Federal Ministry of Information and Culture.
Okay, sir. You may now go in for your interview.
Thank you. Ah, my shoe. And to think I just bought this very expensive foreign shoe 2 months ago.
So sorry about your shoes. This is why I advise my friends to always patronize made in Nigeria products. See this shoe. It's made in Nigeria and I've had it for 2 years and it's still as good as the day I bought it.
Made in Nigeria products are good quality. And stringent government regulations and certification now mean the goods made in Nigeria meet international standards. Make the patriotic choice today. Buy right. Buy Made in Nigeria.
This is a public service announcement brought to you by NTA.
So what's up, sweetheart? You really look like you're up to something.
I have a secret.
Okay.
I'll be going to Europe next week.
Seriously?
Yeah.
Like you have your visa, your passport, your plane ticket?
No, not that way. Some men are helping us. We pay them, they take us through the desert, and then we cross the sea into Europe.
The desert, the sea. Isn't that the route where many have died?
Yes, it is indeed a very dangerous journey. In 2016 alone, 4,900 people died while crossing the Mediterranean Sea to enter Europe. Many were Nigerians. For the very few who survived the journey, they are forced into prostitution or other crimes just to survive. Eventually, they will be arrested and deported to Nigeria. Don't be a victim. Don't go this way.
This is a public service announcement brought to you by NTA.
You're watching Good Morning Nigeria, and you're in time now for our discussion, which will start in earnest. But here's the background report saying that capital markets all over the world have been contributing to the development of nations. This is a broader term covering so many areas, from the bond market to other areas. But for the stock markets in Nigeria, it appears to have its own continuous slide in downward level. Why is it so? Let's find out from Timothy Yusuf.
The year 2016 2016 will remain a remarkable one for investors as the Nigerian capital market fell to a barrage of market forces, similar to those responsible for the 2008 global financial meltdown. This led to massive decline in investors' confidence. Analysts say 2016 has turned out to be a negative year for not only in the capital market, but in every sector of the economy, occasioned by the prevalent economic recession. The nation's gross domestic product, GDP, recorded a negative growth of 2.1%, with the Naira exchanging for 304 Naira per dollar at the official market at the close of the year, while the parallel market recorded 495 Naira. Investors sought safe havens with the recession staring them in the face, and these investments came in form of fixed income securities, Ponzi schemes, and digital currencies in all their quest for higher returns. Most stakeholders attributed the slow economic activities to tight macroeconomic policies, falling crude oil prices, and exit of foreign investors. In spite of the orchestrated market recovery championed by the capital market regulators, the Nigerian bourse closed for the year as the worst on the global scale. It posted a year-to-date rerun of 6.14% for the 2016 financial year. Other factors that affected market growth in spite of the enhanced regulatory framework embarked upon by regulators were hike in inflation, increase in cash reserve requirement by the Central Bank of Nigeria, as well as increase in monetary policy rate. Clearly, short-term speculative actions did not help the market. Analysts say the market scenario points to the need for increased participation of domestic investors, especially institutional investors, as well as introduction of new tradable products to deepen the market. Market participation by Nigerians is still very poor. The nation's economy is set to contract in 2017 for the first time in more than 20 years as capital controls deter foreigners from investing and revenue inflows have not been remarkable.
All right, thank you very much there, Timothy Yusuf, for that background report. We have been joined in our studios at this time by Dr. Uche Uwaleke. He's an associate professor and head of banking and finance at Nasarawa State University in nearby Kefi. Dr. Uwaleke, a pleasure to have you on Good Morning Nigeria today.
Thank you very much, Kinsley.
And then also with us here in the Abuja studios is Dr. Afolabi Olowokere. He's head of economic research and policy management division of the Securities and Exchange Commission. SEC. SEC, of course, is the regulator of the capital market. Dr. Olowokere, a pleasure also to have you join us on the program.
Thanks for having me.
All right.
And moving to our Lagos studio, we are being joined by Johnson Chukwu, a financial expert. So Chukwu, Happy New Year and welcome to the program.
Happy New Year and good morning.
And moving over now to Kano, where we're being joined via Skype by Dr. Farouk Umar. He's the President, Association for the Advancement of the Rights of Nigerian Shareholders, ARNS for short. Dr. Umar, thank you very much for joining us on the program this morning. Well, we'll try to establish the fact that he could hear us. We'll start off our questions and let's take a look at what exactly, how did the stock fare, or the stock market fare in the last part of the year into this big new year. Okay, I'll start off with you, Dr. Olowokere. Let's take a look. There was this lull experience in the last quarter of the year, and also the beginning of this year, the first trading days actually had them being dealt with on a different note. Okay. I'll come back to you. Let's start off with Dr. Olowokere.
Okay, thank you very much. Happy New Year once again. A very good way to look at the performance of the stock markets in 2016 is to take a look at the major indicators of the market and how they fared. One of them is the market capitalization, equities market capitalization. Of course, if you say the capital market, you're referring to both the stock market and the bonds market, but we are focusing on the stock market. Exactly. Equities market capitalization slumped from 9.86 trillion in January. In fact, as a matter of fact, on January 1st, down to 9.25 trillion on 30th of December, the last trading day of 2016. That's about 6.2% loss. If you also take the index, the all-share index, the stock exchange has 12 sectoral indices. Okay, the main one is the all share index. If you take the all share index, it dropped again from about 28,000 basis points to 26,000, about 26,000 basis points. So you find all of that decline. And if you also look at the stocks that are listed on the main board of the stock exchange, about 168 of them, in 2016, about 35% of them were inactive. So 62 of those stocks were inactive, and majority of them were in the financial services, financial services sector. Okay, the primary market too was inactive. We didn't hear, much of initial public offerings or even other follow-ons in the market, as opposed to previous years. And of course, the reason is not far-fetched. It has to do with the economic downturn that we witnessed in 2016. It clearly mirrors the economic performance of 2016, talking about the contraction in GDP. First quarter, 0.36%, second quarter, 2.06%, third quarter, again, 2.24%. So it wasn't surprising that we had this performance. Again, there was also the case of inflation. Inflation rate jumping from 9.6% in January 2016 to 18.48%, as of November. Unemployment rate too was also an issue because as at the first quarter of 2016, it was 12.1, 13.3 in the second quarter, and 13.9, as at the third quarter of 2016. So all of these factors, of course, contributed to the situation we had. Of course, the major culprit in all of this, has to do with the slump in oil revenue. Not just the oil price, because the average oil price we had for 2016 was even in excess of the $38 per barrel that we used as benchmark. But the major challenge was, of course, the output. Now, because we had that oil price, and because of the defect in the economy, where oil receipts account for over 90% of foreign receipts, we had that forex scarcity. So forex scarcity coupled with energy challenges fueled the bearish sentiments that we witnessed in the stock market in 2016. Yes, in 2016.
All right, thank you very much, Dr. Waleke. Lowokiri, this prolonged lull actually have been observed in the last 3 years, at least from industry watchers. Why, despite all the intervention, where do you stand? What exactly has been happening?
Okay, I think Dr. Waleke has said quite a number of things in terms of the background information and statistics, so I'll just move straight to some other factor probably didn't mention. We are in a global world. Investors are from different parts of the world. I mean, whatever happens in their countries will affect their behavior. There's something called home bias. Home bias in the sense that if your economy is doing fairly better than other economies, you probably would like to stay in your country. So if the US is trying to raise rates, and as they've done in some cases, there are quite a number of investors who prefer to stay at home than come to your market. If you also look at the performance in terms of foreign portfolio investment, it has fallen for about 52% in the last 1 year. And the transaction generally on the stock market has fallen for about 42%. In other words, because you are operating in a globalized environment, whatever happens around the world also affects your market. And if you look at the economy of the world, it has not fully recovered in the last few years. So we can't be isolated from the rest of the world. And one of the major impact of that global economy is felt on the oil price. And as he said, Nigerian economy is quite dependent on oil, and it has about two channels, the revenue channel and the foreign exchange channel. The foreign investors that will come to your market are interested in, if I come in, would I be able to go out? What is the level of your reserve? What is the good prospect in your economy? Therefore, whatever happens to your capital market is a function of the global environment, and that global environment also affects your domestic economy, which also affects the companies that operate in your economy. So quite a number of issues are affecting the capital market because it cannot be analyzed in isolation. You say, how do we stand as a regulator? Of course, the regulator cannot just sit and say, let's see how it unfolds. But we understand something, that when it comes to capital market activities, there will always be cycles. There are periods of boom, there are periods of bust. But what the regulator does as much as possible is to ensure that the period of bust the impact is not felt such that people don't run away from it.
To the nitty-gritty of how the regulators will actually channel in all of this, let's go over to Lagos. Kingsley,
That's right. I was just wondering, Mr. Johnson Chukwu, of course, we've had you a number of times on Good Morning Nigeria, and this is with subject matter we are discussing is your area. I would like us to back up a bit and then take a historical view of things. 10 years ago, there was a bubble on the stock market in this country. And then in 2008, that's 9 years, sometime beginning in mid-February and escalating in the middle of March of 2008, the bubble burst. This was well before the global financial crisis. Has the Nigerian stock market and indeed the capital market fully recovered from that bust that occurred in 2008 as a context for discussing what has just happened in 2016?
Well, I wouldn't say the market has fully recovered from the bust of 2008. Simple reason is that we've seen stocks with good fundamentals have now recovered back to those levels they achieved in 2008. But you have to actually look at what happened in 2008. There was a lot of credit that went into the capital market. It was a situation where both domestic credit and foreign funds were pursuing limited volume of stocks. And then we also had the issues of malfeasance that occurred in terms of capital issuance. But if you take the totality of where we are today compared to where we were in 2008, I don't think the market has fully recovered. We've seen some level of recoveries, but overall, we were looking at about 22 trillion, something like 11 trillion prior to the market crash. We've not gone back to that. Today, as at the close of business on Friday, we had about 9.03 trillion in market capitalization. And that, given the fact that we have had additional listing over that period of 10 years, so you can't say the market has fully recovered. But if you look at why the market has not recovered fully, we have to look at what are the exogenous factors. The exogenous factors include what happens in the external environment, the price of crude that determine where foreign investors, whether foreign investors are interested in our stock. And you also have to look at our policy environment, local policy environment, particularly what has happened in the past 1 year, beyond the issue of withdrawal of foreign portfolio investors, is that we have seen a shift in investment from equities to fixed income instruments. We have seen investors underweight their portfolios in equities and overweight them in fixed income instruments. If you look at the institutional investors in the country, like the pension fund administrators, they have moved a lot of their investment to fixed income instruments because the fixed income instruments are very attractive. So we have to look at two segments of investors. The foreign investors that can only come when there is dollar liquidity in the economy, and then the local investors who are not necessarily affected by the exchange rate, but are influenced by the return on different classes of assets. And today, the return on fixed income instruments is far better than the return on equities instruments, and therefore, investors are moving away from equities to fixed income instruments. So the downward trend we've seen in the equities market is not just because foreign investors have withdrawn their investment from the Nigerian market. We also look at the policy environment locally have incentivized investors to move to fixed income in place of equities.
All right, Johnson Chukwu, thanks a lot. I was just wondering, in terms of still pursuing the issue of recovery from the crash of 2008, virtually, I mean, some of the high-flying stocks at the time are now what you can loosely refer to as penny stocks. Now, 10 years ago, we also saw some measure of democratization of investment in the stock market, in which, everybody, Tom, Deborah, whatever name you want to mention, could put in their money there rather than chasing fixed income instruments such as treasury bills. But these days, if you were to speak to the average Nigerian about the stock market, they're going to ask you, look, I got my figures burnt in 2008, why should I go back there? Is that sentiment against the stock market still lingering? And if so, how can we begin to overcome it?
Well, the sentiment to some extent is still there, but I don't think that's the overriding factor. Investors recognize that sometimes you lose, sometimes you gain, but investors are conscious of where the risks are staked. And today, the risks are staked in favor of equities. I mean, negative for equities. If you look at what has happened in the past 3 years, in 2015, the market lost 17.36%. In 2016, the market lost 6.17%. In 2015 and 2016, the market has lost overall of 23.5%. And compare that to the return on fixed income instrument. Investment in federal government treasury bills, 1 year 364-day bills, give you a coupon of about 18.5%, 18.6%, which gives you effective yield about 22%. And you're looking at, over the period of 2 years, you've lost equities, on average, have lost 23.5%. Whereas in a single year, you can actually make, without the risk that return will not come, because the good thing about fixed income instrument that the return is assured. The capital is assured, return is assured. And you can make 22% by investing in a federal government fixed income short-term instrument. So investors are rational. The investors are no longer held back by the fact that they lost money in 2010. Investors are held back from investing in equities because they have alternative instruments that can give them a short return on their investment with no risk, because federal government treasury bills are considered as risk-free. And that is what is driving investors away from equities to fixed income. It's no longer just that they're held back by the fact that they lost money some 10 years ago.
Chukwu, thank you very much. We'll go over now to Dr. Farouk Umar in Kano, who's joined us via Skype. He's the President Association for the Advancement of the Rights of Nigerian Shareholders, like we introduced earlier. Dr. Umar, good morning once again. I hope you can hear me. Now let's take on some of the concerns by your members as regards the law or the continuous downturn on the downturn that, as you have seen. What are your own comments and what are your worries?
Good morning, everybody. My worry about the capital market is that, like the discussions that had taken place so far, investors, we have lost confidence in the market for 3 reasons. No capital market will flourish when you have corruption in the country. We commend the present regime in its efforts to fight corruption. Less corruption is fought, the capital market will not strive. Some brokers had many infractions. You give your money to a broker, you trust him to buy shares for you, and your money is gone. And this is why currently we are commending the leadership of SEC, because stockbroking firms that we thought nobody could punish them, today the story is different. The second reason is electricity. No foreign investor will come into a country and invest when he has to run the company on diesel and LPFO. If you look at the cement companies in this country today, most of them are relying on LPFO. Because of corruption, they can hardly get the product directly from NNPC. We have to buy the product through middlemen and so on. And as such, the price of cement is high. People will not buy the cement if it is very costly, and then the companies will not make profit. And the third reason is insecurity. Who would go to Maiduguri 2 years or a year ago and establish a factory, for example? And again, you have to commend the present regime, because we have seen a big development, a big progress in fighting insurgency. And look at the oil companies now. The shares are down because the price of oil is down. Insurgency in Niger Delta. I mean, these things are affecting us. And then on a final note, I would say that the issue of unclaimed dividend. You go and invest your money in the market. Your dividend, you cannot get it. You cannot claim it. And this is, again, affecting our confidence in the market. And again, we have to commend the DG of Stock Exchange, because now we have electronic payment of unclaimed dividend. And he has already forced the companies to return 90% of the unclaimed dividend to the companies. But I think he should go further to ensure that we have unclaimed trust dividend trust fund, as it is done in other countries. And I think if these things are done, and he keeps monitoring and punishing stockbrokers who make infractions, this may bring back confidence into the market. And again, remember, we used to borrow from banks to buy shares, but today banks cannot give you loan to buy shares because of what is happening in the market. And then so many over-regulations. Look at the banks. They are not making money because, one, they have to pay money to AMCON. Now, even where they are making money, CBN is coming with so many regulations that it is difficult for any bank today to make a profit. And I think over-regulation will not really help us. We have now TSA, which is good for the country, but you see, money that is not public sector money. CBN should allow the banks to manage them. And I think CBN, unless they stop over-regulating the sector, we have a problem. And that is why you see banks like UBA, they are going outside. They are going to other countries that the regulations are relaxed. They don't have AMCON to deal with in Ghana or in Gambia or in Uganda. So I think, again, I'm appealing to the regulators to make the capital market strive. They must stop over-regulating the industry.
All right, Dr. Farouk Umar, thank you very much. We'll come back to you again in the course of the conversation. To return to our Abuja studios, Dr. Uwaleke, that's the point made by Johnson Chukwu is to the fact that we are seeing investor preference for fixed income instruments such as treasury bills rather than equities. Now, what does this mean in terms of growth and ultimately how we get out of the current economic recession if investors are showing less preference for equities and more for fixed income instruments usually issued by government?
Yeah, thank you. Kinsley, the last National Bureau of Statistics report on capital importation into Nigeria spoke about an increase in capital importation to the tune of $1.8 billion. And what is interesting about that is, or what is worrying rather, is that over 85% of that capital importation didn't come by way of foreign, direct investments. Didn't come by way of investments in plant and machinery. Okay, they came by way of investment in a foreign portfolio. And that foreign portfolio was not even in equity, but in government securities, treasury bills and bonds. And why that is so is because of the high yields, just as Chukwu mentioned. Investors, even foreign investors, showing preference for those those investments, and that's because of the tight monetary policy that we have in place today. With monetary policy rate as high as 14%, okay, you find yields of government securities going up. And again, another worrying aspect of it is that even in that fixed income market, especially the bonds market, it is the federal government that is that's dominating, crowding out the private sector, so to speak, because you wouldn't find a company issuing bonds at any rate that is lower than that of that of the federal government. The federal government is doing issuing a security at 19%, because the federal government security is said to be risk-free. That is the one the investor will embrace. Okay, so for the private sector to be able to borrow, from the same market, the private sector, should be able to offer the investor, something that is higher. So that is where the challenge is, and in my view, it's not helping, the economy at all, because as I said, when investments come into the capital market, they don't come into equities. They come in fixed income securities, bonds and treasury bills. Treasury bills, and of course, they are short term. once there is any little shock in the economy, these same investors, take away, their funds, and of course that also affects the exchange rate. Okay, so and that's also part of why you find a lot of financial institutions having problems, in 2015. Look at stocks like Sterling. Let me even mention Sterling, Sky Bank, Fidelity Bank, turning today as penny stocks, and that's probably why the Nigerian Stock Exchange has even reviewed the Nigerian Stock Exchange NSE 30, the index, trying to exit. They're now exiting Diamond Bank and Sterling Bank, and then welcoming Presco and Okomo Oil, because these are stocks that performed well, last year, again on the back of favorable government policies on agriculture. Now we talked about 2016 and how stocks fared, but agri stocks didn't fared better because if you also look at the GDP reports that we've had, the agri sector was spared of the contractions that we've had, successive contractions that we've had. So that also reflected in the agri stocks. Today, Okomo Oil, Presco, doing at 14 naira, each of them, doing, very well, as opposed to some stocks in the financial services sector. Of course, you also know that in 2016, a lot of banks battled with issue of high non-performing loans. Again, something you can also tie to the fact that we had depreciation of the naira. Many of them were already exposed, to the oil sector. The banks that before now, we are doing well. We saw them, doing, apart from Zenith and GT Bank at over 20 naira, and Zenith Bank at around 14 naira. Apart from these two, and maybe Stanbic IBTC at 15 naira. Many other banks we are trading, at below, 10 naira. So the financial services sector was hit. Agri stocks, did well. The ones in the consumer sector of the stock exchange, some of them too, felt the impact, of the downturn in the economy in 2016. So for me, what the investment that will really drive the economy, that will really create jobs, are investments, real investments, because when you invest in equities, you're helping these companies to raise money, you're helping them to expand, okay? When you also invest in corporate bonds, that is the bonds issued by these companies, you have the same effect. But as I said, unfortunately, the investment in bonds, are dominated by the federal government. So they're only lending money to the federal government. And of course, you know the story today, that the federal government, the cost of servicing domestic debt, has gone very high. And that's because the yields in government bonds have gone high. So that is not helping the economy, in my view.
All right, Dr. Yes, Waleke, thanks. I was just wondering, Blessing, the point made by Dr. Farouk Umar concerning the behavior of some capital market operators. We know that when they had a boom, some of these reports were fairly common then as to how some operators, misbehaved. Do we still have a high incidence of negative conduct by capital market operators, particularly those in the stock market dealing with shares?
Not as we had before. And I think the regulator has tried to put a lot of policies in place. Dr. Farouk mentioned about 2 of them, and I would like to add 2 others. He mentioned the issue of direct cash settlements, and that was a very good game changer in the market, in the sense that stockbrokers cannot sell your stocks without you being in the know. Before now, people just heard that, oh, my stock has been sold, and something that it was borrowed, it was transacted, but I was not aware. But now you will always be aware of what is happening to your stock. That is a way of boosting the confidence of investors. In this type of market where information asymmetry is a bit high, you want investors to have confidence in the market before they can then come back. So direct cash settlement is a very interesting and very effective policy in that area that the regulator has been able to implement. Another one you mentioned is the e-dividend. In the e-dividend, before now, you have to be struggling with a lot of dividend warrants, whether they should be paid to the bank, whether they can take it on savings account, how to deal with it. It was a big issue, and there was signature irregularity and quite a number. A lot of people have quite a number of dividend warrants that are not paid. But now, once the dividends are paid, they are paid directly into your accounts, and that makes it very seamless and very interesting. And that's why the regulator has always been making this advertisement that everybody should go for their mandate, to mandate their dividend. In other words, you go to the bank, you take a form, and they indicate the companies that you have stocks in as the registrar. Immediately you do that, the dividend that have been accrued over the past can be paid directly into your account. Subsequent dividend will then hit your account. And as at now, we have about 1.7 million accounts that have been mandated in the capital, and 1.4 million of those accounts have been effectively attached to the BVN. Actually, we want to use BVN to identify uniquely investors in the capital market. Before now, one investor can have several shareholders' accounts, and there are duplications of accounts. But what the regulator is also doing to be able to know how many investors do we really have in terms of numbers and in terms of unique investors. So those are things that the regulator is doing. Another thing the regulator is doing is the risk-based supervision, in the sense that before now, you just go to supervise in a classical way or traditional way. But now you need to understand the balance sheet and every aspect of the activities of the capital market operators to be able to know what constitutes risk and how do you deal with the risk, so that investors, especially the retail investors, are not at the receiving end. Of course, you know, once beaten, twice shy. Quite a number of investors that ran away. Some of them are yet to come back. Even when they come, they are very careful, because everybody is you have to play safe. But you just have to boost the confidence of investors. And the regulator is also trying to do a lot of public enlightenment. There's financial literacy week, quite a number of things, going to different zones. I mean, we were in Port Harcourt, Abeokuta, Kano, trying to make sure that people understand the capital market. It is a knowledge-driven market. So you must understand it, so that you don't burn your fingers.
Okay, thank you very much, Dr. Olowo Okere. We'll return to Johnson Chukwu in Lagos, of course, from everyone's perspective. There are different things that should actually help build the confidence of the investors, whether domestic or even the foreign. Now, let's take a look at all those areas that are still of greatest concern. Dr. Umar talked about overbearing regulations. Well, you might wish to talk about that. But making this recovery path in 2017, because some of those indicators that you have mentioned are still following into the year. How do we begin to address some of those areas of concern to everyone in the industry?
Well, I think we have to start from the macroeconomic policy environment. The capital market mirrors the performance of the general economy. Like one of my co-discussants, I think that's Dr. Uche mentioned, we saw a contraction in the economy throughout 2016, 0.36, 2.06, and 2.44 contractions in the first 3 quarters of last year. We need to address the issue of the macroeconomic environment. I mentioned the issue of interest rates. If we want to restore growth in this economy, we must address the issue of both local currency liquidity and foreign currency liquidity. Particularly the one that is within our control is local currency liquidity. We have a situation where a lot of funds are moving away from the vault of the banks to the vault of the central bank as a result of high yield and high volume of offers of treasury bills. That is reducing the available liquidity in the economy. So credits are not going to even the real sector of the economy. So you are seeing a situation where the public sector is carrying out the private sector. And you cannot have recoveries in the capital market if you don't have a buoyant private sector. If the economy is contracting, companies that are listed will not be able to make good returns, and therefore they can't pay dividend. And if they're not making good returns, then their market prices, the equity market price, the equity prices will reflect their underlying performance. And so we need to restore economic growth at the private sector level. What we have seen so far is that even the policy announcement contained in the budget is focused on reflecting the economy through the public sector expenditure. But it seems to have the private sector as its blind spot. Growth must come in the private sector. The company you are buying their shares must be able to make good returns on their assets, as to pay good dividend, and it is those future stream of cash flow that we are buying in the equities market. So that must happen. Then The other aspect we must address is the foreign currency liquidity situation. We must achieve some level of stability in our FX environment. And that could come in form of one that is within our control is to address the crisis in the Niger Delta. If we improve on our volume of production, today, last December, we did about 1.45 million barrels per day. If we can go back to something close to 2 million barrels per day, given current price of crude, we should have enough earnings from our traditional source, which is crude sales, to stabilize the exchange rate. If you need to stabilize the exchange rate to expect that foreign portfolio investors will become aggressive in your stock. The third factor is that we need to restore confidence on the Nigerian economy. Previously, our instrument used to qualify for JP Morgan Barclays emerging market indices. Today, we have been ejected. We've seen our sovereign risk downgraded by Standard & Poor's and Fitch. We need to create the right environment that foreign analysts, foreign portfolio managers will begin to assess us positively. We need to do those things before we expect market recovery in 2017.
Johnson Chukwu, while we are still with you, that's a point, gentlemen, I'd like to raise at this time. Dr. Olowokere referenced it, and you've also just touched on it. In other words, you say foreign investors, they are keen on investing when they are sure that they can also repatriate their returns. And one of the ways they seek to have confidence is to take a look at your foreign reserves. I've often wondered why we have this obsession about our foreign reserves. I mean, this is not the only economy in the world. Elsewhere, you don't find this level of obsession, even with other African economies. Are we running our foreign reserves, just for foreign investors to come and then download it from time to time?
Well, not really. You see, we have a unique or peculiar economic environment or foreign exchange earning situation. Because our foreign exchange earning is basically tied to crude export. Like 90% of our foreign exchange earning comes from crude export. Other countries have more diversified foreign exchange earning sources. So they are not in a situation whereby if the price of crude or price of a single item moves in the negative direction, the entire economy goes into a crisis. Any country that has a mono-export product will be focused, will be panicking whenever the price of that product changes. And that's the situation we have today. If you go to more advanced countries that have more diversified foreign exchange earning sources, they don't have to be focusing on their foreign reserve, because the foreign reserve gives investors confidence that that country is in a position to meet its foreign currency obligations as at when due. And if you have diversified earning sources, then you are not you will not be so much concerned about the price of a particular product. And that's our own situation. Until we diversify economy further away from oil, then our foreign reserve will be a critical factor in determining who comes to the country to invest on short-term basis.
Let's get your take on this.
Yeah, thank you. You asked why the obsession on foreign reserves. Just as Chukwu said, it has to do with the structural defects in the economy. The fact that we're also relying so much on oil. Look at Egypt, for example. Egypt's foreign reserves is also about the same size with that of Nigeria, $25 billion. And yet, Egypt was among the top countries in the world in terms of stock market performance in 2016. Even when Egypt had or still has a challenge in their forex, in their exchange rate. Remember, Egypt not too long ago devalued their currency from £8 to the dollar to £12 to the dollar. But the foreign reserves are about the same size as Nigeria, but it didn't really reflect in the stock market performance, because, as I said, Egypt and Zimbabwe had the best stock market performance in 2016 as opposed to Nigeria. So our challenge is the fact that we are relying so much on this source of government revenue. And if you also notice the performance of stocks, in 2016, and even before now, we try to mirror you know, the vagaries in the international, you know, oil price. Towards the end of last year, when oil price spiked to, you know, above $50 per barrel, we saw stocks like Mobil, Texaco, Conoil, doing very, very well. Stocks in the oil and gas, subsector, mirroring the fact that oil prices are, are going up. And anytime you find oil price, crashing, you find these stocks also having issues, especially the banks too that gave loans to some of these oil companies, because most of the banks, we understand now, restructured their loans based on $30 per barrel. And now that oil price is doing above $50 per barrel, okay, there is hope that in 2017 some of these stocks will begin to appreciate. So I agree with Chukwu that the challenge, the major problem, has to do with the monoproduct, nature of this economy that relies so much on oil, forex oil.
Okay, Dr. Walike and other gentlemen on the program this morning. We have reactions coming from Nigerians who are watching this program already. We'll take a look at them, and when we return, at least to continue discussion, we'll take a look at what other countries or developed nations are doing very well that we could borrow for Nigeria. We'll start off with that from Sani Michael Omakoji. Says, first thing first, as we say in accounting concept, get rid of those quacks and corrupt stockbrokers, then we are good to go.
Harun Mohammed has this tweet: the potential of the stock market should be maximized so that the economy can move forward.
From Mike Anyako, we can augment funds through capital market window. The challenge now is how to make our stock market strong and viable.
Festus Akimboyewa has this tweet: the stock market is very important in our quest for economic development, and the government must create the enabling environment for it to thrive.
From Dele Jack Solomon, thank you for bringing this topic on this topic for discussion this morning. It's a clarion call to government and corporate organizations to sit up.
Well, this is from Suleiman Sanusi tweets. I read it yesterday that the Nigerian government offered 430 billion naira for bond sale in the first quarter of 2017. Now, what's the take of your analysts on this?
And so from Suleiman Sanusi, Nigerians lost hope with both the financial institutions and stockbrokers as well. Perhaps that's why the sector is in decline.
All right. Now, those are some of the tweets that we are taking in the meantime. Just to return to our guest, Farouk Umar. Farouk Umar, we're putting you on standby, but that will be after this break.
Certainly, Ajunwa is the Olympic champion.
We did it.